What's up, everybody? Good morning. Big day today. Minutes coming out. Janet Yellen speaking in a little bit. So basically it'll be a light-ish day. It looks like there's some pre-selling into minutes, but light-ish day until maybe 1 o'clock. So that's how it is. You know how the minutes go. Good morning, y'all. The market needs a couple days. Right? Just watch what it's doing. Almost at lower DD band, which is great. You see days like that, could be already, you know, what I like is to wake up and see a day that just looks like crap and then say, you know what, I'm gonna sit out today. Take it easy. Catch up on something fun around the house. All right.
Hyundai Ioniq 6 versus Tesla Model 3. Look what Ioniq 6...
One minute. Sorry, my mic was muted. Okay. When you hit that lower DD band, I usually call it a day. So rational, we're good. VIX futures breaking higher highs. So be careful. We have Fed minutes today. Can cause some volatility. Anytime you touch lower DD band, my day is over. So could be a good day for the float. You're coming down here with the bullish DD with no irrational signals, and it could also bounce off of that to some resistance. So we'll try to see where those are. Just a moment. Let's go to the main screen here. All right. Okay. Hit that like button, everybody, if you don't mind. Our data coming through in just a second. Sorry, I muted the mic, so it's like smashing my breakfast down. Not every day has to be a trading day, right? If this is a day that just looks too risky, I decide to sit out, then it's great, because then I take the day off and do something fun, or do something, well, or do something meaningful. Mostly something rocket scooter related. Catch up on whatever I need to catch up on. Sure, let's do this really quick. All right, so the S&P mean reversion. So again, middle reverting. Any upside, yeah, this is a down day today for sure. So in the middle, wall to middle is usually resistance. Even if we do get a positive DD, we've only got bulls in right there. So there's no upside today. This is down day. Interesting. Bear short up. Let's go ahead and pull up the liquidity map on that for the NASDAQ. So yeah, this is a pretty much down day today. Bear short up has downward pressure off of hedge pressure from the bottom. So any upside on NASDAQ, rejection there. So tiny upside, possible resistance there. So not an update today. IWM, yeah, all of them are good. Man, I was going to call it easy today. And maybe take the day off. All right. BSU is a very interesting one. So Russell's actually the stronger of the three. You can tell that in futures right out the door. BSU is hedge pressure, monthly hedge pressure support resistance. So being that we would be down here, it would have rejection potential down there. IWM has a hedge break. You can see right here. So be careful for that flag. UVXY. So easy out the door, man. I got the stuff. I'm going to sit out today. I'm going to call it a day. Probably stream for about 10 more minutes and we'll come back at FOMC minutes. Smash that like button, everybody, while you can. Give us some love. Don't forget, help out the algo. Yeah, free day. Free day, take it easy. Easy, easy. Resiliences are way negative. UVXY does have resistance off of hedge pressure, so we might get a quick float bounce really quick on QQQ. Let's double check. Now we see evidence of what the float is. Here it is one more time. It's so neat how that works. It just finds the desire to not touch that bottom line. If it touches it, day's over. Irrational from there. If it goes below. So we're coming in at 0.8 on the DD ratio. So still bullish, but it's not bullish for reversal today. These are some pretty nasty selling days back to back after that big breakout we've had. I think the market is still going to push its way higher over time. Not necessarily today. Right? So, but the float is showing that there's possible support there. But to nothing, right? I don't see anything to really trade to give me any incentive. Res is negative, so the support only goes to the box. So we're going to fight low and probably trade lower. It's going to take minutes to give us some boost to the upside. So right now, nothing. No trades for me, nothing. Let's take a look at, why is liquidity pocket? Let's do it. Illiquidity pocket. See some runners really quick. Man, what a cool day. Like, wake up, sit out, take it easy. That is a lower DD band on NASDAQ. We call it the float. So, like anytime you touch the band, the dynamic will change for the entire day. That's just a thing that happens. You will see volume try to push away from this band when that DD ratio is bullish and push away from the upper side when it's bearish. You can see it just does not want to go there. So if it does go there, it's bad news, like yesterday. Right? Y'all remember the class yesterday? Literally in the middle of the class was like a mic drop moment. It was like right here. And when NASDAQ had failed, was it 80, 41? Where were we? What day was that? Oh, here. So like yesterday in the middle of the class, whenever DD ratio is positive and you do interact with the lower band, that's not a good sign. You don't trust that rally. And I'm literally teaching a class on, we call it float failure. So if it doesn't reject without touching, it's bad news and you don't trust what you see. And I'm literally 5 minutes or 10 minutes into the class and I'm like, you don't trust, whenever float fails, you don't trust any bounce. And as a mill, I'm saying you don't trust any bounce. These like lines come out. And it was just like another mic drop moment in the middle of the class. Here we were talking about it right there. So you want it to hold without touching. So clearly there's going to be right, some rejection there. That's a pretty nice move on the NASDAQ. So that's pretty expected that we're going to not go there. At least we shouldn't go irrational against second in a row, but just be careful today. There's really no evidence that it does anything but reject hedge pressure, and it's probably selling from there at the worst. Don't see anything else. SPY, obviously in that same situation. Hedge pressure break probably require a catalyst. It'd be weird for that to happen today with IWM breaking to the downside. So today, likely rejection from this area, I would have to say. I would rather take the day off personally and then not do anything from here. Not good clean signals. Even if I do have a hedge pressure break, it's capped inside of here. So today's entire day, let's piece it together, right? Resilience less than 0. We have rejection there. Illiquidity pocket, which is when they're oriented like this, there's probably like a zigzag move on a hedge break. Not expected. The expectation is to reject here and float towards the middle. There's likely to be support here because DD is bullish, right? So all things point to essentially flat to down today. You guys see how I did that? That's how I draw a trade plan. And just using tools and rocks here. Let's go ahead and go to the monthly map and get a feel for the overall. Monthly map still has that same look months out. It's still not that bad. Downside today, but overall, front week of this, you can see how there's a little bit of bear strengthening, bull strengthening for like 2 or 3 days. So we could have some definite downside for the rest of this week. Very easy to see, right? Bulls taking profit, bears getting a little stronger before the bulls started to continue. So we have about 2 or 3, maybe 2 down days, you know? We have a channel, Benjamin. We either teach you how to convert it yourself, or we have a channel of folks who do convert it for you if you're in the Pro Plus membership. So Pro Plus has like member rooms, so members will create their own rooms to do different things. There was a group of futures traders who got together to make a futures conversion community, and all they do is convert the numbers from the ETF to the futures. If you're in Pro Plus, you can have access to that. So Pro Plus has a lot of other little rooms that open up, like little rooms like that do cool specific functions. It's not available in the extended trial just because it's too much stuff. Like if you go into the extended trial, it's a guided experience. Like if you don't open up all the rooms, because then you'll just kind of get lost. There's too many things to play with. Yeah, so as soon as you upgrade, you'll be able to check it out. Called the Futures Conversion. They've been doing it for years. Same group of people. They're awesome. They're just waiting for us to get futures data, which of course we are working day in, day out for that. We are doing we have to create all the pieces one at a time to do the connections. So right now let me kind of check the status really quick. Let me tell you where we are. So probably rejection here and somewhere downside. I don't want to short it. I'd rather just sit the day out and chill. Okay, we've created a testing plan for all the pieces we need. Successful log on, log off. So basically to be very, very fluent on, very detailed on making sure there's no errors. Because once we open up data and trading, you know, we can't be having like any kind of errors or outages. So we're being very meticulous about this. Getting group of instruments requested, getting symbol resolution, testing, getting candle data, like all the pieces, like we're going through here. I'm reading the list of my testing plan. So like we have to go through and make sure each piece works one at a time. Like, what happens if you send an order and it's rejected? What happens if you fail login attempt? What happens there? What happens when you submit an order? What do we send back? Yeah, confirmation, yada, yada, yada. So it's what's being worked on now. So the estimate was, as of last week, 2 months to full implementation. So it means I'll have the ability to be testing some things way before that. But we're not going to go, since it's actual trading, we're not going to go live until it is fully completed, tested, verified. I mean, we'll be very, I'll be able to use it myself a little bit to make sure it works with no problems. But that's exciting. Okay, we have a quick fix put in today. Let's test it out. Not a quick fix, but a new addition. Remove drawings. So let me see. This is why I wanted this, and I told him to make it for me really quick because it's something we need. Let's go back to the daily mode, for instance. Let me start marking some gaps, right? All right, very quick. Here's an example. Is that gap still open? Okay, good. All right, so let's go to whatever that day was. Let me go back to like a hourly chart. Got that auto scaling. Let's go ahead and let's go to, I'm just testing out a couple of things with this. So essentially what it'll do is toggle on and off your manual drawings. I thought he picked 1 hour chart. There we go. Okay, let me try that again. Ah, there we go. That's right. I was like, why am I scrolling so far? Okay. I'm just looking at okay, 412, 412. Let's go up here. Oh, way back. And actually, you should probably change the language from remove drawings to show drawings, because it looks backwards the way that's labeled. To toggle it on to say the word remove, really should be okay. So if I do this, it's supposed to remove it. So nice. So toggling it on. Actually, no. To show drawings. That way, when it's toggled on with a check, they are visible. You like that? So that's just a feature I put in right now. So that way you can, when I do monthly maps. Oh, okay. So yeah. Matt, have you seen the video on monthly maps in the Discord? We just published it. Just gonna hear daily. So beautiful, like this. So when you click it, it removes. When you unclick it, it goes away. Oh, because I was wondering like where all my drawings were disappearing yesterday, and I had it backwards. So I have them. I'm gonna change this to go. It's gonna be called Show Drawings. So you click it, your drawings should show when you. And actually, hold on. Yeah. So when it's toggled, it will show the drawings. If you want to remove the drawings, you'd untoggle it. So we're gonna flip the radio. You said the toggle button back and forth. To the other way, and we're gonna say show drawings instead of remove drawings. Pretty cool. So the idea is when I'm doing like monthly maps, for instance, I don't want to see all this. All my drawings there, I can just quickly do that, and they're gone. That is pretty awesome feature because all my monthly map drawings had all my gaps still on it as well. And then S&P is trading down lower. Just be careful. I'll see you to read the monthly maps in just a second. Let's go here. Just like we said, down day, like easy peasy called it. I didn't want to short it, but watch for float. Watch for float. DD still 0.76, still good. So if we touch that lower band, I'm gonna call it. But watch, there's the float's gonna start stepping in, and again, you're gonna see some fight there. But I'm gonna forecast that it's gonna probably hold, but we'll see. There's still no upside today for me to really want to trade this. It's easy to see sitting out. That VIX climbing to higher highs. It's not a good sign leading into what's it called? Into minutes. All right. Well, no, I'd rather not short because A, we have an event today, a catalyst today, and B, it's really just when you're shorting in a bull market, there's no discernible like bottom. I have no idea where I'd short to. It's really hard to pick a risk to reward direction. The only place I would pick would be shorting to some value right here above this band because I know that's where it's going to want to try to fight against. So had I shorted, it was only worth 8 points anyways, right? So if there was enough room to fall like 10, 15, 20 points, I'd take it. But just an 8-point scalp, I would know that kind of really a waste of time to trade this to here, even though it's a pretty high probability that it would go down. But I would get out right now before it touches this band because I don't expect it to actually touch the band. If it does, then the market gets crazy and volatile and whipsawing. Like shorting when volatility starts to move on irrational markets tend to just be volatile. They don't necessarily just collapse and go really quick. They move very tortuously, so it's not easy trading, right? The way to describe it a little bit easier is like bull markets tend to become less volatile. Volatile is like how much up and down you have when it's consolidating. For example, bull markets tend to like be less volatile as you rally. The VIX goes down. Bear markets tend to get, or not bear markets, but like irrational sell-off days tend to become like more volatile as they fall. It's not like they fall nice. It's not like they fall in stages and consolidate. Markets fall, they get really whipsawing and crazy. So like when you break through hedge pressure and become irrational, it's just the general direction is down, and it's like, oh, I should have shorted that, but from where? It's a kind of a chaotic move, and it's not, in my opinion, not wise trading. Chasing shorts or just not taking it long. And yes, another thing is we're above monthly hedge pressure. So and monthly maps are still bullish. So I'm looking for long trades only. So when I identify a down day, I just sit out. And that's power because I don't have to go in there and waste money on every single day hoping. Right. What's up with NVIDIA today? NVIDIA has earnings today. Don't they? What's up, Kobe? What's up, girl? I haven't seen you in forever. I know. Clients building up so much, not getting time to yourself lately. Well, hey, that's good. Like, it's good that stuff's getting better. Because I remember last time we hung out was like right after COVID cleared up. I was thinking it was like the early 2021 maybe. I'm glad to hear that your business is doing good, man. It's awesome. How's life? I need to head out that way sometime again. It's good to see you. Glad to hear your business is doing great. Just shoot your text. Oh yeah, absolutely. All right, we did touch lower DD band on SPY, so that's it. Day's over. Day's over for me. Okay, so NVIDIA, you said. What'd you say? There's so many bull zones on daily and NVIDIA. Right here. Oh yeah, I mean, what this shows is uncertainty, right? Especially for today, like especially. Right, there's a lot of uncertainty on the stock. It's just the way that it is. You're gonna see that there are lots of discrepancies between what people believe, right? So even if, you know, as the algorithm is looking for a nice clean split, you can see there are some very large positions hedged both ways, popping up with these dealer calls and puts alternating like this. That's just what it is. And again, we have earnings today, so you can expect a little bit of, you know, non-conformity here. Like there's going to be, or non-uniformity here. There's going to be a lot of separation because things have, like this have rallied so much in the tech sector. And this is today. You know, it's the strongest sector in the bear market right now because of all the AI stuff, right? And, you know, obviously it's just, I mean, let's just be real. NVIDIA is like almost at all-time highs again. Right? So clearly there's going to be a lot of put protection popping in on that. Everybody knows stock market's coming down some more over the next, you know, year or two. So, you know, does NVIDIA go to higher highs and break all-time highs? In a recession, right? So clearly you're going to see a little bit of, you know, lots of really near-term puts here. But the people that shorted, right? Shorts and call, like basically shorts are getting squeezed, longs are put on some protection. Yeah. Udry's right. So the report comes out after close. I think I'll be in a space at that time. So after the market closes, it's just the video is going to move around a lot, but that's just showing you that. Okay, let's go read monthly map real quick. We had float failure on the S&P. We are irrational on DD break. UVXY has a hedge pressure break as well. Oh wait. That triangle needs to be Red. Made a little bug fix there. Yellow is okay. I'm so excited to get futures and DD bands and all that stuff automated in the platform. Oh my gosh. Okay. Let me pull up a stock real quick. I'll do Apple. The way you look at it is this. These are options that expire at these points in time. Mapped out like this. So if price were to hold flat between now and then and not go anywhere, you can see that there are just more bulls as the weeks go by. These are all bulls, right? Bull zone. So if Apple were to go nowhere for 4 weeks, you can see more and more bulls are piling into Apple. Why not do futures data first and add trading later? It's coming simultaneously. That's the way the futures industry works. To get data, you have to have a brokerage account with the futures FCM. So you're not just gonna be able to just buy a data feed. You're gonna need a brokerage account to buy your data. You already do that with your futures account. You already have. You just think about it. Use Tradeovate. You have a brokerage account with NinjaTrader. You pay Tradeovate $10 a month for your data. You know what I'm saying, Glenn? It's the same thing. The industry works that way. So you have to get a brokerage account anyways. You have to deposit money in the account. You have to pay for data to get futures data coming through. So you might as well allow you to trade your account. Yeah. So you're right. I'd like to just turn on the switch to get futures data. You can, but to redistribute educational data in futures without brokerage account, you have to pay a whole lot just for paper trading data, what they call it, right? So if you want to get like a data feed, like we do with equities, is different. The equities exchanges has a whole different fee schedule, and futures and equities are so different. So future, like equities, we're data feed redistributed. We can redistribute candle data and you can display it. If you do that on futures, it's ridiculously expensive. No one does it. Everyone just gets the brokerage account. They call it educational rates. So just because no user will want to pay $75 just for CME Group futures candle data a month, because the rates are high like that per user. We have to charge per user. So, and I think the futures industry does this because they want you to open accounts, you know, support the industry. Data's cheaper if you actually have a trading account. So like you'll basically have to go get a brokerage account with one of our partner brokers. If you want to get the data, you'd buy it from them. They'd send you the data. You can trade through them if you want. You don't have to. You can. Okay, cool. Is that Jimmy did breakfast sandwich? No, dude, it's like a protein bar. I'm starting to get back into being uber healthy eating, so I'm starting to eat like sugar-free stuff and fat-free stuff, or not fat-free stuff, but like not slamming Jimmy Dean's every day, that's for sure. Okay, All right, back to the futures, right? So if Apple were to stay flat, do you see how the way it's designed right now, if nothing were to change, there are just more bulls. Like each one of these areas is just showing you where bulls are. So there's bulls all the way in here. There's bulls all the way down there. There's bulls all the way down there. And there's bulls all the way down there. Do we understand that so far? Lower bull zone means more bulls. More people long. And more bull. And when you think about it, the same thing in reverse. If Apple was here and trading across the board, there are fewer bears at this price, because here there are clearly bears, but then there's no bears and no bears and no bears. So if the bottom of the bull zone goes lower, there's more bulls. If the top of the bear zone goes lower, there's just less bears. There are bears getting squeezed or closing out. So if the bull side were to move up, it's fewer bulls. If the bear side were to move up, it's more bears. Right? So when you see it like this, couple takeaways. Number one is there is still the strengthening bullishness over the next month and a weakening bearishness. So that means there are net buyers and shorts are getting squeezed, as you can see. Another thing is the distance between the two zones is the volatility. So the volatility is expected to be pretty high on Apple, as you see for the next 4 weeks as well. Hold on. All right, I'm back. Hold on 1 second. Sorry, I had to go get my keys for Nicole. The link for Twitter Spaces. If you go to Twitter and you follow me, if I'm in a space, you'll see the space pop up. But on your home screen, anybody that you follow that's in a space, the spaces will show up at the top of your feed. Okay, so back to here. Volatility, the expected volatility for the week is actually really high. So volatility would be the distance between these zones, right? So if you look at this right here, I mean, 158, 162, that's pretty big. And it's getting bigger leading into the next FOMC meeting. So volatility is present, which means that this like stable run is pretty much over for like being stable. So it might have some downside for upside, you know, like whatever, it's going to get more volatile. I'm just drawing the volatility. It's not really going to trade like that. But you see how there's volatility. I was trying to draw on the top of there. That's what you're seeing. Oh, my cats are coming in. Hold on. So the idea basically shows that you have increasing volatility for 3 weeks to help you with being on buy side or sell side. Bull side's getting slightly stronger, bear side's getting weaker. So the way I'll look at it is this. If I wanted to sell puts, chances are that puts down there, puts down here, puts down here. Buying, if I want to buy puts below these bull zones, like if I'm long the stock, clearly I will want puts down in here. Buy puts, sell puts, you have a credit spread there. Then you have to be puts down here. They could be puts anywhere below, right? You want to sell a debit spread or sell a credit spread. Yeah, actually, well, as you see every morning, you wake up and redo the map. So let's look at something a little more complex like SPY. Right? So you can see that you have 0 days built into this as well, which is cool. You can see there's a lot of tumultuousness here. You can see that the bull zone actually goes. So this is today, right? The 23rd. I mean 24th. Let's go right here. Where is today? Let's go ahead and. So do you see that for the 24th, 5th, and 6th, like basically there's 2 days where the bull side is weaker and the bear side is stronger. So it's like, this tells me there could be 2 days of selling off, and we're clearly seeing 2 days of selling off before it gets a little stronger on the bull side. So essentially the market looks like it can sell off for a couple days, like 1, 2, end up somewhere down in here and still stabilize. Bull side stronger, bear side weaker. So essentially it just kind of paints a picture of, we've been rallying, maybe 1 to 2 days down, a relaxed day, maybe another day down, and then it tends to continue to keep going. As the bull side is stronger, each one of these waves up, you can consider sell off in a way. So sell off wave 1, bull side hangs, sell off day 2, or wave 2, bull side hangs, and then bull side hangs through the rest of July. Like, you can expect the market probably looks like that. So we might be entering like a week or so of selling before it does seem to stabilize. But then again, every day you reread the map. So I read it just like that. So essentially, if the dark gray is going down, market's going up. If light gray is going up, markets are going down. So it looks like we've got some downward pressure on the SPY for 2 days. And the 0 days really kind of paint a good picture. So NASDAQ, it's like both sides are liquidating, right? Bears are still getting out of the way, bulls are getting out of the way. So NASDAQ is becoming more volatile over the next couple of days. Right, the space between it, apart from this day, the 26th, which is Friday, You can see Monday, Tuesday, Wednesday, spread out, even spread out, spread out. So NASDAQ is about to get very volatile, as we showed with Apple, right? The volatility is going to pick up through next week. So this is just a thin, volatile market for about a week on NASDAQ before it kind of cleans up a little bit and then resumes its bullish path through the summer. So again, drawing this out, the way I see it is, you know, you might have 1, maybe 2 days down, a couple of relaxation, another wave down, and then it just starts to climb again. It's still wanting to climb. And NASDAQ is even stronger later, like through September. Like the S&P seemed to want to pivot around the end of July. NASDAQ still seems to want to carry on throughout the rest of the year. Isn't that crazy? That's some really strong bullish bets there on the AI and the tech sectors. I mean, it is the future. I'm not going to lie. I mean, it is what everybody's talking about. It's definitely got immediate utility. I mean, AI is writing movie scripts now. So like, or has been for a while. It's not like crypto where the utility is decades away. I mean, AI is here today. So there's a real reason for this. And it's, people are calling it the AI bubble. I don't think it's a bubble yet. I think this is an AI bottom, but that's just me. I remember the .com. Everybody wished they would have got in on something. So people are going to want to get in on these tech companies. That's why you're seeing that. Does the price on the chart match up with the monthly map zones? I find it kind of confusing that the bull zone's going down means the market's going up. I know that's what technical analysis does, right? It kind of makes you like see that, okay, if it goes down, it should go down, right? So you have to analyze. It's like let me draw it. It might be easier. Right? Technical analysis always tends to ingrain your brain to thinking of that relationship, right? Hold on. One second. I'll show you I'll show you a better way to see it. I promise, Jamie, hold on one second. Okay. So the way that you think of it is the easier way to say it, right? Let me draw some bull zones. Okay, there's 1 week. There's 1 week. So it shows how time changes sentiment. An example, stock is right here today, and then this is tomorrow, and that's the day after. If this moves right here, then people that have calls or like, or say this example, just say bulls. There's bulls here. Bulls are in the money on both days, okay? Because you see that if I bought calls at that, if I bought calls at that strike, or I bought calls anywhere in here, then they're in the money. If price falls to there, these calls are not in the money, but there are still bulls down here that are hanging out that are in the money for a day after. You see that? So the idea is that if you want to just do a little geometry here, consider this to be like the number of bulls, right? Or there's bulls at these prices. There are bulls at these prices. So there's just more bulls. Also, with the first example I said, if you fall to here, while there are no bulls here, there are some a day later. So not only are there more bulls, but there's more bulls over time. So going this way, there are more bulls at a lower price. So if there are more bulls at a lower price, that's the down. More bulls is the up. More bulls at a lower price over time. That's why it seems confusing, because it's telling you two things in one sentence. There's more bulls, which means up, at a lower price, which means down. I just don't say at a lower price each time. So when the bull zone is lower lows, that just means there's more bulls over time at a lower price. Does that make any sense? Follow Jamie. Or if you were to just color in these boxes, think of it like this. There's nobody here. There's nobody in here. So imagine nobody here and then somebody's there. So if we were to fall here today and hang there for the day, it's not bullish, not bullish, not bullish, then it's bullish a day later. There's still bulls in the money. So it shows that as time goes by, there's more bulls per time at this price. So you can see that when there's no bulls and then some bulls, again, more bulls to the party. Yeah, well, you use this information for 1,000. You can use it for 1,000 things. You can structure trades, like how far out in the future should I strike? If I want to buy a put, what date do I pick? Well, what's my map look like? All right. I can use it for general sentiment, which is what I'm using it for. Where to hedge, where to buy protection. Oh, click monthly map. Here's my map data. What is going on here? There we go. For example, on QQQ. If I were long QQQ and I wanted to hold on to it for the month. Okay, so what does a month look like? Let's go all the way out to June 20 something. Well, June 20 something is a general strengthening of bull side and weakening of bear side. Okay, so I'm probably cool to hold on to my QQQs for the long haul. But I need some put protection since I want to hold it month over month to get a dividend. Let's just make an example, pretending I want to do that. Where would I buy puts? Well, if you see throughout the month, the bottom of your bull zone is down here for one. Number two, 295. So the market can fall all the way to 295 and still be bullish on this 1 week. Right? And typically over the course of time, you see generally falling even to 320, 321 is also still bullish support. So I want to make sure that I have at least puts in case I lose my bullish support at any given week. So let's just draw where those supports are. So this is like an array of supports, right? So I know, like, I would want to be buying dips again as it hits those bounce points. I would be adding to my long position to get a better cost basis for the future rally. So if I were long this thing and I would have puts like a week out, for instance, I want to hold it for a month. I can either buy puts every single week, or I can buy puts a month out, knowing that I'll not lose my buying power, so I can buy the dip. An example. So if I say that a month out would be here and 300 is where I'd be willing to buy the dip, but wouldn't it be nice if I had some puts that are, you know, relatively close to maybe here where all that bull zone is accumulating now? So I'll have puts. Like, I'm long the market with puts right here, because if we lose the bull zone, it's probably bad. But if we lose the bull zone and it hovers right here, it's only bad until here where it's actually bullish again. And I'm holding those puts that are actually making some money, buffering my loss. And then the market dives, then I add to my position. And I've already got a hedge to secure my lack of losing money and my buying power, right? Or if you're if you're like maintaining a short and you want to secure some income off of your short, you could sell puts the same way, like daily puts. Like every day, if the price is trading, say like right here, if I want to sell puts that expire tomorrow, let me sell puts in the bear zone, right? If I'm short and then selling puts, then clearly if the market falls, my short pays out, my puts lose. But if I'm short and the market continues to go against me and I sell puts and sell puts and sell puts and sell puts, I can sell puts in the place where it's likely not to go. You don't easily cross from one zone to the next, right? So I could sell puts in the bear side. There's a bunch of ways to do it depending on how you like to trade. There's no one way to trade. Yeah, Peter kind of said it. It's like calls reaching further down in price over time would mean dealers are hedging by buying the underlying at that week. They'd have to, because those calls are in the money. The call sellers would have to also buy the underlying because those calls are in the money, which they probably are already doing, but they'll be providing support throughout that range. So it just shows an array of supports as the months go by. But in general, you're seeing that the support gets lower and the resistance gets lower, right? So it means that sell-offs are still selling into bull territory. There are people who can't wait for a dip to buy. That's basically what it's saying. There are people that are like, shit, we missed out on this. We need to go long. And that's maybe kind of a way to think about it. So I try to wrap my head around it. It's thinking like, okay, if you're willing to buy lower next week than you are now, like, okay, if you had a house, somebody wanted to sell you, let me think about it, hold on. You're gonna buy lower. If there's a neighborhood where the houses are worth $1 million each, and every week the price is going down 900,000, 800,000, people will perceive that differently. There are people out there that'll say, okay, that housing market's going to crash. Let me get out. I need to sell. There are other people out there that might say, ooh, it was $1 million, now it's 800,000. That's a deal. If you're willing to buy that asset at a lower price, you're bullish that thing. If you're willing to buy this at a lower price, you're bullish that thing. While other people are selling. So while it does show, you know, while we will have some selling pressure, there are still bulls in waiting for months out, ready to get that dip. Or these calls could be shorts tightening their hedges, which is even more bullish. They're more afraid of being short. Like, if I'm long the market and I buy puts like way out of the money, I'm not really that scared of the market, right? If I'm a bull and I buy puts like literally right underneath price, I'm very nervous of the market. So my bullish position is being shaken. So if puts are going higher as time goes by, closer to the money, don't you see that my bullishness is wavering or my bearish thoughts are strengthening, right? Does that make it easier to see? So puts going up means either I'm thinking the other side using it as hedging. If you're long the market and you buy puts way out of the money, you're not going to be really afraid of your position. There's low delta puts. They're not going to hedge that much. If you start piling in 0-day puts at the money, you're very scared of your position right now. It's panic. So as the bear side gets stronger, people are willing to hedge higher or people are willing to short higher. Either way, both show increased bearishness or bearish sentiment. So I use it as sentiment gauge. So literally NASDAQ through the summer till the end of August still shows bullishness. Now, it doesn't mean we go straight there. It just means that dips are going to be bought up. And let me tell you, this monthly map has been exactly like this all year. Whether we have waves of downside where everybody's like, see, I told you the market's bearish. There are bulls in waiting. There are bulls in waiting. There are bulls in waiting. It's been like that all year, and there's still bulls in waiting. Actually, through September. So it doesn't mean we go straight there. As a matter of fact, I can't wait for the market to do like this, and then everyone say, "Oh, I thought you said it's bullish till the summer." Wait, oh wait, what? Wait, what? The idea is you can't predict how it's going to get there, but people are showing you their positions. There are people who just can't wait to be bullish this tech. The FOMO is strong in this one right here. For 4 months out. So that means is I've still got 4 months of really good dip buying. If this is the crappy month that sells off, right? We have some volatility playing out. VIX is trading really high. We have UVXY hedge break, irrational markets. Crazy, right? We knew today's coming down. I sat out today, didn't take a loss. Pretty good. And then going forward, I'm like, okay, so where are my fellow bulls at? Once I get a good bullish day or a good hedge pressure break to the upside, I'm willing to jump back in and long again because the sentiment's certainly long. Now, again, it's a little chaotic. It's not always clean when you start looking at these 0 days, but you still get a good picture, right? You can see it does bounce around a lot. And this has to do with the sensitivity around different news events. We have big day, small day, big day, small day when it comes to events. But generally speaking, you know, you can see that. Let's just look a month out and Monday. That's just like to the Monday, Wednesday, Friday, the next 4 days. Bull side stronger, bear side weaker. So it does show that the selling off is still not done yet. So we might double top, or sell for 2 or 3 days, bounce up, and then continue to sell. Second wave. Probably a couple weeks down, but V's, not just crashing. And that gives me that feel of the market, right? That's QQQ, so SPY, same thing. It's such a great tool. I mean, last October when I tweeted this is the bottom, right? It's all monthly maps. We didn't have the tool out for you guys, but I was doing it manually by just chaining single days together. That's how I said October was the bottom, and it's been that monthly map configuration has been that way since October of last year. It's shown that same relationship. And the whole way up, people are denying that it's been bullish. Like, whenever I made that tweet where I Babe Ruthed it, was literally on this day. You can go to my feed. October 17th is when I said this is the bottom. And the bear market doesn't come back till summer of next year. And that was phenomenal. Well, it was monthly maps. Like, no lie, it's cheating. It just shows you the positions. It literally spells it out for you. Just literally tells me it's everyone's positioning. So that's kind of what it is. So SPY, you can see, is very strong, much stronger than NASDAQ, as the bear side is deteriorating. So SPY is going to be the stronger of the two. So really, it just shows that we're going to have somewhat of a weaker sell in tech, I would say, over the next couple of days. I'm sorry, a stronger sell in tech, and maybe a stronger S&P, because the S&P is a little better. The bear side is deteriorating faster in the S&P, which means the S&P is not going to sell off as hard as the NASDAQ. Which doesn't make sense because NASDAQ's the one's been selling the hardest, I would think. Actually, no, let me start over. They're roughly the same. Why did I think they were different? They kind of look the same. Yeah, they're roughly the same. So they'll probably trade in tandem then. They're both going to move about the same rate. Let's actually look at that. Are they? Yeah, they're both kind of doing the same thing. So it doesn't seem like Nasdaq's moving faster than the S&P. They're about at par. Yeah. So you can see that even the shape of the monthly map's looking exactly the same. You can see the indices are kind of moving relative to their own. DD band's the same. It's like Nasdaq is moving faster. You see IWM is like less painful today, right? Let's see what the map looks like for IWM. We'll call it a day. IWM kind of looks different than the other two. Much stronger bullish side, very weak bearish side just in the immediate term. At that time, the bull side was just hunkering down. Like the bull side wasn't deteriorating anymore, where it was moving higher and higher and higher. If like the market is crashing and you look out in your monthly map and you see bull zones are like this, right? There's just fewer bulls. But bull side started like flattening out and getting messy. And then price popped up and held in the bull zone and you had like flat bull zones. And I'm like, oh, support is in. Does that make sense? What are you talking about in chat? Coin. You got about 10 seconds and I'm gonna like mute you. Something coin. What? Please mask. What? Coin. Are you a robot? So when you start to see that bull side, like when markets are selling up and you see that bull side flattening, then there's supports coming in. Just like when you see the bull side going up, the price going up, and then the monthly map starts to flatten out, the bear side is no longer, the bull side is no longer strengthening. I don't know what you're talking about, DJ. Do I understand? I do not understand. I'm sorry. But that's only one of the pieces. Like the bottom also had a very, 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 very long thesis I wrote, and I posted on Reddit that also was fundamentally based as well for the bias. It wasn't just monthly. Monthly maps just said this is it. The commitment of traders played a big part in that as well. Dealers were going net positive, which typically means bottom is in as well. There were fundamental reasons for betting that the Fed was going to start tapering rates when they were raising rates. 75 basis points, and I'm out there on Spaces saying Fed's going to go to 0 rate hikes by summer, and people thought I was dumb, and I was right because it's likely going to be the case. I even tweeted every month what the FOMC rate hike would be back then and tried to forecast every month. And I said by April, we should be at March, April, we'd be at 0. So 0 rate hikes. So freezing at 4.5 was, I thought, what we would be doing. Or freezing at 5, no higher than 5 by summer, somewhere in that range. So we did get a quarter last time. we might get 0 this time. Well, maybe not. It depends. The market's more bullish than expected. The Fed might continue to press. So that's what they're really gauging. The labor market and the stock market. To see, they don't want to push too hard, crash things. Post an analysis of something. Oh, yeah. Hold on. Let me do it. All right. So pay really close attention, DK, Glay. All right. So what I'm going to do, watch my screen really quick. I'm going to click. There's 3 dots on my screen. I'm going to do the analysis, I'm going to click this button called hide user on channel. And what it's going to do is it's never going to allow you to speak again on the channel. And that's how I did the analysis on whatever you asked me to do. Any questions? Okay, good. I hope you were taking notes because I'm not going to be able to see your questions. All right, I'm out of here, y'all. Love y'all to death. We'll see y'all tomorrow. We'll see y'all. Be careful. FOMC minutes today. Bottom call on my Twitter in October. Yeah, I did. October 17th, 19th, whatever day it was. 2 days after it bottomed. You can go. I bookmarked it on my Twitter. It's there. All right. Halo. Ooh, that might not be a terrible idea. Yeah. I have a really busy day, but maybe for a little bit. Love you guys. All right. See y'all in a little bit. Or see y'all later. We'll do a Zoom call roughly about lunchtime-ish again. Okay. We'll see y'all later.